Now, U.S. investors aren't the only ones waiting to see what the Fed does to move forward with this stimulus program. Emerging markets around the world have seen a dramatic decline in their currencies since the Federal Reserve hinted at winding down its plans. India has seen a massive 13% drop in its foreign exchange, the rupee, this year. Brazil's real has fallen 14%, and even Indonesia has tumbled 16%. Other countries, including South Africa, Turkey, and many around the world, are dealing with sharp depreciations of their own currency. Analysts say that the recent volatility has also made some investors, well, a little more apprehensive about doing business in emerging markets right now. India and Brazil's central banks have thus far raised key interest rates and intervened to try to boost up their currencies. Now, the recovery of the United States economy is key to get the whole world moving once again, but in the short term, it's also causing some problems for emerging countries such as Brazil. For more on what's happening here, we go straight to Paulo Cabral, live for us in Sao Paulo.
Well, the first thing is that we should say that President Dilma Rousseff was set to visit the United States in October, but this state visit was, well, in diplomatic lingo, postponed. But since no date was set for the visit, then it was in effect cancelled. And this was due to allegations of spying. When the first allegations emerged, Americans said they were only looking for potential terrorist threats, and the matter cooled down. But then later, new allegations that the monitoring would have included even the office of President Dilma Rousseff and also Brazil's national oil company, Petrobras, made matters much worse. President Obama even called Mrs. Rousseff yesterday to try and convince her to visit anyway, but she couldn't offer what she really needed to do this, which would be some kind of apology or an assurance that would allow her to save face here in Brazil. This decision has been widely supported in Brazil, and actually most analysts said she did what she had to do, which was to cancel the visit for political reasons, even if most analysts also say that this won't change in any way probably the behavior of the U.S. intelligence community towards Brazil. And there is also an understanding here that in the long term, U.S.-Brazil relations are more important than this issue. The United States is an important trade and investment partner for Brazil, and people in the biggest economy of Latin America know that in the long run, their country has much more to gain than to lose with the recovery of the U.S. economy. However, Brazilians will have to overcome some turbulence if they want to reap the benefits later.
We are going to have a very difficult period concerning capital inflows to Brazil. In this particular sense, we are going to suffer a lot. Why? Because normally investors will change their position seeking the United States as a safe haven in terms of investment.
In August, Brazil lost almost $6 billion of its international reserves. Very little compared to the total reserves of the country, but maybe cause for concern if it turns into a trend. Currency markets also felt the heat. The Brazilian real reached a peak of over 14% devaluation this year in late August. On the upside, however, Brazilian exporters will gain with the appreciation of the US dollar, and there is hope that the demand for commodities and their prices will go up. And Americans are big buyers.
We have 40% of our exports to the US. So we still depend on the exports to the US.
Well, the United States remains a key partner for Brazil, but it's also important to say that Brazil is not as reliant on the United States as it was just a few years ago. Actually, since 2010, China became Brazil's main trading partner after decades of dominance from the United States, since World War II, actually. So both American and Chinese economy are watched closely by Brazilians, and both a recovery in the US as a slowdown in China would be cause for serious concern in this country.
Yeah, Paulo, this is a big deal. I mean, how's the government there reacting to this sort of unique scenario they're facing?
Well, you know, the Brazilian government has been raising interest rates. This is mainly to control inflation, but it has also the effect of trying to keep some of this capital here in Brazil that's been flying to the United States. But you know, paying better interest rates, it's easier to keep them here. And also, the Brazilian central bank has been selling quite a lot of US dollars of its reserves in the market to try and contain the US dollar. It has been successful to some extent. And finally, also, I mean, at this level, the exchange exchange rate of Brazilian real to the US dollar is not that bad to Brazil because it's helping exporters in the end. So if Brazil is able to navigate and to play with this, it could even reap some benefits right now.
All right, Paulo Cabral joining us from São Paulo. Thank you very much.